Welcome to Winning Wall Street's Money. Help support my channel. We need to get to 1,000 subscribers pretty much as soon as possible. So then I go live streaming because YouTube policy, they won't let me go live until I have 1,000 subscribers. Thank you to all the folks out there that have subscribed to my YouTube channel. If you have not yet, please take this moment now with helping me. Click subscribe. Next, click the bell. And next, click all. This helps you receive a notification when I post my next videos. Plus, click the thumbs up button and every time you watch my videos. If you got value from this video, if this was helpful, then please consider sharing a small monetary donation to my channel by going below and clicking on either my Patreon or PayPal links. If you join my Patreon page, then you'll get early access to these videos 24 hours before they're posted on the YouTube and lots more. If you prefer just leaving a small tip, click on PayPal. Either way, then you get that warm sense of satisfaction years down the line knowing that you helped me become a successful YouTuber. Saturday, November 20th, 10:18 a.m. New York time. Going to be using the desktop trading platform Thinkorswim that's offered from TD Ameritrade. We're looking here at 6 grids. Each grid has a different financial instrument. The top are U.S. Treasuries, and the bottom are the U.S. yields. Understand this. Another word for yields are interest rates. Yields go higher, interest rates go higher. U.S. Treasuries trade inverse than these yields. Again, yields, aka interest rates, got it? So in the futures market, we have these U.S. Treasuries, and there's a 30-year top left, the middle is the 10-year, and the top right is the 5-year. And inverse on the bottom, we have the 30-year here yield, the middle is the 10-year yield, and the bottom right is the 5-year yield. So let's look example on the far right. Far right, again, I said is a 5-year here, U.S. Treasury. It's declining, the trend is down, but the yield, aka interest rates, are going up. So the shorter duration, the 5-year, first all the way on the far left, is 30-year, the middle is 10-year. So sure, the shorter term duration, the 5-year, is a faster moving typically than the 30-year. Okay, got it. So the Federal Reserve determines and sets U.S. interest rates, and then those have effects on the trends. Understand this. The stronger, the higher U.S. interest rates typically is stronger that currency. So when a nation raises their interest rates, underlining, let's say the United States raises their interest rates, that typically strengthens that nation's currency. There's also safe haven currencies. So even if a country is not changing their current interest rates, certain geopolitical events could have flight to safety in certain currencies. So one of the safe haven currencies in the world is the US dollar, along with the Japanese yen and Swiss franc. Okay, so let's look here first on the bottom of those yields. Again, yields, another name for interest rates. Weekly charts, each candle is a week. So the current 30-year Treasury, look, is in a decline. It's come here into a demand zone where buyers stepped in. The 10-year, excuse me, I apologize, coming off the lows in consolidation phase. And the 5-year trend was up, it's in a consolidation phase. So again, the faster time frame, the 5-year one, is higher for the year to date, bottom right here, year to date, is at the all-time high. The 10-year here is below the year high, but not too far. First, the 30-year, here's the high for the year. I'll open this up again. The 30-year yield, here's the high for the year, and we're much closer to the bottom for the year. Big difference. The 10-year, here's the high for the year, we're much closer. And again, the 5-year is at the high for the year. Yeah, big difference. The 30-year US Treasuries, also called the bonds. Understand, US Treasuries have different names. The 30 years are called bonds. They have much more volume, the largest amount of volume than the shorter duration ones, being the 10 and the 5 and the other ones. Yeah, so most traders trade the 30-year US Treasury bond. And look, the trend is up for that duration. So again, they trade reverse. So if this is going up, we know the 30-year interest is going lower. You could trade these. I recommend if you're going to trade these, focus on the 30-year. Right there, there's a symbol /CB. You can trade these 6 days a week, Sunday night all the way to Friday on the futures market. If you have a broker that doesn't offer you futures, then go open a broker account with a futures account. The 10-year US Treasuries are called notes. Look, they're near record low for the year. And the 5-year, also called notes. Again, they're all treasuries, but there's different underlinings of them. Got it? Just like Ford manufactures cars and trucks, and they have different names. There's a Ford truck called the Ford 150. The Ford larger models have 300 series. There's still Fords, just like treasuries, still has treasuries, but there's different styles of treasuries, and just like there's different style of Fords. Yep. Well, look here, the 5-year US Treasury note, we made a new low for the year, broke below this consolidation. That's interesting. That's interesting. Closed back inside that range, but that should be concerning. Maybe that trend still has more to go downside. Okay, let's look here at the US dollar. The US dollar. US dollar index is comprised of several currencies. US dollar, issue candles a week, made a new high for the year, strong like bull. So we see, and also the policies of the Federal Reserve saying they're not going to be raising interest rates anytime soon. So if the US dollar is getting stronger, and I mentioned raising interest rates typically strengthen currency, the US dollar is getting stronger. Well, it's not necessary because the interest rates are being not raised, and it's a safety reason to consider. Yeah, so maybe people will go into US currency because it's more of a safer currency than other nations for stability. So just think, next year if we raise interest rates, this might go even more higher. Okay, yep, broke above that number. Now let's look at the currencies within the US dollar, some of the major pairs. The biggest currency in the US dollar is the euro. That euro represents a big portion of the US dollar. It represents 57.6% of the US dollar. So the euro on a weekly candle, look at this, the trend is down, made a new low. Huge difference. Yeah, record low for the year. So if you go on vacation to Europe now, you get a lot more bang for your US dollar, a lot more buying power. Japanese yen, it's one of the safe haven currencies I mentioned. Here's the high for the year at the top left. Look at that, made a new low for the year. But for the week, it closed back inside this consolidation, but still broke below that. And look at how that candle formed. Yeah, huge tail on the bottom. So maybe we're going to have a reverse factor where when you look at the euro, yeah, it's very bearish. It closed near the low for the week. Okay, let's look at the British pound. British pound is the third largest currency in the US dollar, making up 11.9%. Inside candle for the week. See that yellow one? Yeah, we'll remove this because this was a swing low, this yellow horizontal line. I took it out last week. Yep. So this green area is a zone, and it's a demand zone. Buyer stepped in here before. Notice here it stepped in before, went up, then went down. Gonna keep this here because it's working. It's not done yet, so we'll keep it as a dot. This was the green area, was the demand zone, and then we broke below it. So now it ended. Yeah. Even though that yellow candle, understand that yellow candle is interesting. Why is it interesting? Because it closed inside that red. The candle, yellow candle is hollow. Hollow means equivalent to a green candle. Typically, these inside candles turn around to become reverse points. So look here, this yellow candle here, after the big green move, it ended to the upside, reverse went down. Same here. The trend was down here, reverse went up. Yeah, I'll remove that. So maybe less confusing. And then you hear red candle, the trend was down here. Inside candle, the yellow one, reverse went up. So maybe that's what's going to happen. It's going to have retracement, understand retracement of here. But still, the bigger picture is bearish, the British pound. So even that retracement going up, I would consider to look for the opportunity retracement for a place to trade short. Got it? Yeah, because we know the weakness here already went lower. So I need to update this. Oops. Yep, let's update that. Let's go on to the next currency. Canadian dollar. Here's the high for the year. Look, we're currently trending down. This has been a demand zone before, this green area. So that's an opportunity to look for it to test. And testing there, if it rejects like these candles did, see this had a long tail on the bottom, rejected, that'd be the buy opportunity. So watch this trend continue. And if it continues, like I said, down here, we're looking for the opportunity to trade for the bullish side. I understand so many times if it keeps testing this, it might eventually break and go lower. So again, that's concerned too. And the Swiss franc, one of the 3 safe haven currencies. Look what it did. Here's the demand zone where buyers were, had a tail, went up, same with here. So come next week, I'll watch how that weekly candle finishes. If it finishes green without taking out the low of last week, if it closes inside this prior week, that may be the reversal for the buy opportunity, because this has been trending, channeling. Yeah. Still, here's the high for the year. Here's the low for the year. If we break below the low of this weekly candle come next week, that's not good. So this is a swing low here. I have to see if it comes into that. I'd be even more bearish if it takes that low out. These are concerning things to be aware of come next week. Bless me. Thank you. Be aware, next week is a short trading week for the US markets. Some other countries too, especially US. Thursday, the market's closed. Friday's half a day. Yep, light trading most of the week. And looking here, finishing with the Australian dollar declining, coming into a demand zone. But again, the bigger picture, the trend has been bearish. So one would think maybe it's going to take out these swing lows. And these swing lows, wow, if that happens, we already know that's going to put more pressure on the US dollar going higher without even the interest rates being changed. Yep. Time will tell. Time will tell. We got another swing low here. Just some things to be aware of and watch. So if you get this information and like to have it a day earlier, subscribe to Patreon and you get much more faster notification of what's happening.